Hello investors! In this video, I'm going to go over 7 high-yield REITs you should consider adding to your portfolio. Let's get started. A retail REIT with a focus on community and lifestyle centers, outlet malls, and regional shopping malls is Simon Property Group. Simon oversees some of the best commercial real estate investments in the United States, including its well-known regional malls that draw both domestic and foreign tourists. These establishments offer a distinctive in-person retail experience that is not comparable. Simon has a dividend yield of 5.9%, the highest on the list. A retail REIT with a focus on single-tenant structures in the U.S. is called Realty Income. Realty made 315 mergers worth $1.87 billion in the third quarter of 2022, the second highest quarterly acquisition volume in business history. The stock actually performed the best of any REIT on this list in 2022, with a total return loss of only 6%. Realty pays a dividend of 4.6%. A specialized REIT called Digital Realty Trust offers data center, co-location, and connected solutions. The business put forth a strong third-quarter effort that included record-breaking annualized bookings of $176 million and indications of pricing power. In order to meet customers' needs for space, power, and connections, Digital Realty has successfully evolved from being a simple data center space provider. DLR currently has a dividend of 4.4%. A healthcare REIT called Ventas focuses on hospitals, senior housing, medical office buildings, and other types of healthcare facilities. In the third quarter, Ventas reported an 8.7% increase in same-store revenue for its senior housing portfolio. An aging baby boomer population is optimistic for long-term demand. The dividend paid by Ventas is 3.9%. A residential REIT called Essex Property Trust owns and manages multifamily buildings in the Pacific Northwest and California. Exposure of Essex to highly competitive markets like Los Angeles, San Diego, and San Francisco will drive sales growth. In these key markets, trends like income growth, declining home ownership rates, and expensive single-family housing are tailwinds. Essex has the worst year-to-date total return loss of any stock on this list, despite paying a dividend of 4.1%. A healthcare REIT called HealthPeak Properties makes investments in healthcare facilities. A 5% same-store cash growth for HealthPeak in the third quarter of 2022 was higher than anticipated. HealthPeak sold off the majority of its senior living holdings during the pandemic in order to raise about $4 billion, and the remainder of its portfolio is heavily weighted toward assets in the life sciences and medical office sectors. In both of its segments, the company attracts credit-grade tenants and owns high-quality assets in premier markets. A 4.7% dividend is paid by HealthPeak. Located in Boston, New York City, Los Angeles, San Francisco, and Washington, D.C., Boston Properties is an office REIT that owns office buildings. The initial 2023 funds from operations guidance provided by Boston Properties were somewhat underwhelming. Still, the company's long-term strategy of owning and developing premier properties that retain high-price rental rates and high occupancy will continue to support growth. Boston Properties prioritizes value creation and portfolio renewal while keeping a healthy balance sheet. The dividend from the REIT is 5.5%. Investors should consider adding these REITs to their portfolios for passive income and potential long-term gains. Like and subscribe to the channel for more content on investing.